And hello, everyone. Welcome to Power Scanning. It is April 25, 2026. And once again, today, we will be on the lookout for the most interesting swing trading setups for the week and the weeks ahead. My name is Daniel, and I will be your moderator throughout this session. And I'm greeting you today once again from our beautiful office here in downtown Montreal in Canada. And before we get into today's topic, let me ask you guys, where are you calling in from? Who do we have in the room today? Please put your location into the Q&A box. Let's see. Who do we have? Art is there. Hey, Art, how are you? From Frederick. No flying today. Rainy and windy. All right. Better to stay safe. All right. Good to have you, Art. Who else do we have? We have Aubrey from gloriously sunny evening in Cyprus. Yes, we're all jealous of your location, Aubrey. Nice to see you. Bruno from Denmark. Hey, Bruno. How's Denmark? Are you from Copenhagen or perhaps from Getse? I'm from Rostock, and I know Getse is just a small ferry ride away from Rostock, about 2 hours. Jens from Frankfurt. Hey, Jens, how are you? Nice to see you. Daryl from San Francisco, California. Good morning to you, Daryl. 9 a.m. in San Francisco right now, so good morning, breakfast time. Charles from Houston, Texas. Hey, Charles, how are you? Good to have you. Andrea, still from the Canary Islands. La Gomera. All right. Well, it's the last day, she's saying. Well, enjoy your last day. And thank you for spending your last vacation day with us here today. That means a lot. Shouldn't you be at the pool right now? Question mark. And Ilona from Nice, France. I think that's the first. We never had somebody from Nice, from the Côte d'Azur, the Blue Coast, as we say. And Bruno saying from Odense. Okay, this I don't know where that exactly is in Denmark. Oh, yeah, I wouldn't even speculate where this is. I've been to Copenhagen. I know where that is geographically speaking, but Odense, I'll look it up afterwards. Raymond from Montreal. Hey, Raymond, nice to have you. This doesn't happen very often either. We have somebody from Montreal. Great. Well, thanks, guys, so much for sharing your location. Let's get into it. As you know, once again today, we will be on the lookout for the most interesting swing trades for the week and the weeks ahead. Now, what is a swing trade? Well, first of all, the duration is somewhat limited. People say between 1 and 20 weeks, but I don't really like to think about duration too much. What's important is when it comes to a swing trade is that you need to manage it. Meaning you need to check up on it every once in a while. We suggest every day, at least once, you should take a look at to where your swing trade is right now. Do you need to close it perhaps? Do you need to adjust it? Do you have to change your stop level? Maybe lock in some profits, maybe book partial profits. This is what needs to happen with a swing trade. It's not a buy and hold investment, which you can just buy and then check in a couple of years again, which I'm sure works great for certain symbols. So swing trade needs to be managed. A swing trade is also not a day trade. We have to check up on it every 5 minutes or so. That's also not as extreme. So once a day is completely sufficient, I believe, for a swing trade. Now, what we're going to be doing today is what we have termed the 13 minutes strategy. Now, once again, the number doesn't really matter. What's important is that what we're going to be doing today is something that you can do from the comfort of your home in just a couple of minutes. And we recommend doing the same process every day, if you have the time, once the market closes or perhaps before the market opens. Spend a couple of minutes, use the scanner, see what has popped up on the radar right now. Once something of interest has popped up, well, then you open up the price chart, you check out the setup, and if everything comes together, you potentially place the trade. That's the idea. So it's a very fast process. Our dashboard, as you will see, our scanner is designed for speed that you can find what you're looking for very quickly. Now, who are we in the first place? For those of you who are joining us today, perhaps for the very first time, well, first of all, welcome to the club. It's nice to have you. And we are tradingindicators.com. We're based out of Montreal. Our office is right here on Union Street and René-Lévesque, if you know the geography of Montreal. My name is Daniel. I'm the guy here on the left-hand side. And together with Homa in the middle, we have created trading indicators about 10 years ago, a long time back. I met with Homa yesterday for a strategic meeting on the West Island. That's where she's from. West Island is a bit more of a residential area in Montreal. We brainstormed about the future of the company, what we can do. And of course, we watched the hockey game too at the same time. And Nicholas here on the right-hand side has joined us about 5 years into our mission here at Trading Indicators. And he's become, indispensable for much of our latest development. Now, What we do is typically based on what's called technical analysis, which is basically a mathematical pattern analysis of your price chart. We believe that fundamentals like geopolitical news, earnings, and all these things, these are almost immediately priced in. And by analyzing your price chart from a technical point of view, you will indirectly take into account these fundamentals as well. And this simplifies trading a lot. And to us, if something is more simple, oftentimes it's more powerful and sometimes even more accurate. So most of what we do is to simplify trading, to break it down into just a couple of few concepts. And that's exactly what we're going to be doing today. And this is exactly what we'll be scanning for today. All right. Now, a couple of housekeeping items. And first of all, a very important one, the disclaimer. When you trade, make sure that trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance or really anything based on historical data, keep in mind that this is not necessarily applicable to future performance. And any trade ideas and strategies and setups discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right. So with this out of the way, a few other housekeeping items. First off, what we will be doing today is to use our trade scanner called Liquidity View to scan for interesting swing trading setups. It would be best if you followed along. So if you don't have access to our trade scanner yet, to Liquidity View, you can sign up right now for a free trial. Nicholas, I know Nicholas is in the room. Please put this link into the chat. It's already there. Perfect. So click on this link, tradingindicators.com/view. It will open up a form. Put in your contact information. You will also put your payment information there, but you will not be charged. You can cancel at any time within that week. There will be no charge being made. But what's cool is that you will get instant access as soon as you sign up to our dashboard, and you can follow along interactively. So if you want to take advantage of it, tradingindicators.com/view. For those of you who already have access and want to know everything about the dashboard, everything that the dashboard has to offer, we have recorded a very comprehensive bootcamp available at tradingindicators.com/bootcamp. And Nicholas, please also put this link into the chat. In this bootcamp, we explain every single feature of the dashboard. There's so many of them. The dashboard is about 3 hours long. It's really comprehensive. We don't expect you to use all the features for your trading, but perhaps take the time, just watch the bootcamp, spend the 3 hours, maybe once you're on the treadmill or do some exercising. So at least you know what's out there, what we can offer, and then you can just pick and choose. Hey, maybe I want to use this scan and this feature and this indicator and so forth. Put them all together into what you want to use for your trading and take full advantage of the dashboard in that way. We also have a Discord channel, and we're trying to grow this Discord channel step by step to build a trading community. And Discord is completely free at tradingindicators.com/Discord. This will bring you to an invite page. You accept the invite, and then you can, log into our Discord server. And what we're trying to do there, I'm quickly going to go to Discord if I can find it. Give me 1 second. There we go. It looks like this. So in that channel, we are posting setups that we like. Oftentimes from a day trading point of view, because a lot of stuff what we do is based on day trading, but we are also posting swing trading setups, such as our trade of the day on Tuesday, which was a long trade on low blocks, which worked out quite nicely so far. So join us there. There are other users in there as well. We're trying to build a community where traders are helping other traders. That's the idea. So tradingindicators.com/Discord for this. And this link is also in the chat. Nicholas, if you can, please also put this link there. All right. So moving on, let me just see if I can find my slides. The ebook. We have an ebook written called The Power of Three. In this ebook, we are further detailing the 3 main setups that we're typically scanning for. The bounce setup, the zone break setup, and the zone break retrace setup. If you want to know why these setups matter to us, why we like them, and why they work oftentimes, check out this ebook on more information. The link is also in the chat. And lastly, if you have any feedback regarding the dashboard, please don't hold back. Your feedback is what drives the further development of our dashboard. We constantly are trying to improve it further. And for example, one feature which we just recently added to it, just to give you an idea how powerful your feedback can be, is an index filter. Let me just show you real quick how this one works. I'm going to go to our dashboard here. And one thing we added, and this came from Kevin. I'm not sure if Kevin is in the room today. If you are in the room, Kevin, thanks so much for your recommendation. We have added this new column here. If you don't see index written here, you have to first enable it here in your column configuration dropdown. So index needs to be checked like this. You can see it here. And once done, you see directly whether a stock belongs to a major index. For now, we're going to grow this. We're only tracking the S&P 500 and the NASDAQ 100, but we're going to extend this to the Dow, to the Russell, to some foreign indices as well, like the Euro Stock 600, the DAX in Germany, and other things. So that's coming as well. And then you can see directly, hey, to which major index or market does a particular stock belong? So for example, if you look at Apple, Apple right now, well, not right now, Apple is in the S&P 500 and in the NASDAQ 100. So this can be a useful feature just to see directly what is the index that the stock is in. So this came directly from a recommendation by a user, and now it's in the dashboard. It can be as easy as this. All right, so now with this, let's start with our market review. So what has happened in the last week on the markets? I'm going to switch over once again to the dashboard, and let's start with the SPY. And the ETF that tracks the S&P 500. And the first thing I want you to pay attention to once this loads is this beautiful drawing, which I drew last week onto the chart. Was it last week? I believe so. I'm going to take it with the RSI here. So that was last week. So what do we see here? Well, we can see that price broke above resistance on April 16, basically completing this V-shaped pattern in the S&P 500. So we came down very quickly in the Middle East crisis, as you may want to call it like this, and then markets recovered just as quick. And I thought, hey, this looks familiar. So I scrolled back in the chart, and we went back and back and back, and we saw this one down here, another V. Let me just move this a bit out. There we go. So we had this V here as well. It's a bit bigger, okay? But kind of looks the same as this one here. First we go down, then a little bit up, then down again, and a quick recovery. Same thing here, down, a little bit up, down again, and a quick recovery. And I thought, that looks kind of peculiar. Maybe we can use this pattern to forecast what may happen next. So I thought, okay, let's see here what happened last year after the tariff wars. This is what caused this V here. We broke above resistance. This has already happened here. We initially go up. This is this is happening right now. And then after a couple of weeks, 2 weeks, give or take, we see a retracement, a pullback down to broken resistance level. And then another move comes up. If history repeats itself, of course, there are no guarantees. This is speculation. But sometimes, you can get some clues here. What could this mean for the future right now? So let me just quickly hide these labels because they are distracting a bit. There we go. Okay. So if this repeats itself, I think what we're going to see is another leg. We're going to move higher a bit more for perhaps another week or two, perhaps reaching a level of 720, maybe 730 around. Then a retracement down to our former resistance level here, around 700, and then another leg up. At least if history were to repeat itself. So what does this mean for you right now, for your trading right now? Well, you could, I'm going to show you a better opportunity in a second. You could anticipate prices moving up further in the next couple of weeks and enter long in the market. I think there's nothing wrong with this. I personally have, of course, probably like most of you, a strategic position in the S&P 500, but it's a buy and hold position. From a swing trading point of view, maybe wait for a bit of a pullback if there is one, and then enter potentially long. But just be aware that probably there will be a deeper pullback coming up in a couple of weeks in the SPY. What about the Qs? QQQ, very similar picture. Of course, the Qs, the NASDAQ 100 ETF is correlated very much with the S&P 500s. Same pattern here, V-shaped recovery, now trading above resistance here. Also here, I believe markets may move up a bit further. We're going to see a pullback down the line in a couple of weeks, probably down to the broken level here, and then possibly another leg further up. But then let's look at the Russell. So SPY, QQQ, quite similar pattern. prices are already above their resistance level. What about the Russell, the IWM? Here it's a bit different because also here, of course, we broke above resistance. Off this broken resistance level. So we're not far off. Like in the SPY, we're further away. In the Qs, we're further away. In the Russell, we're still right here. And if you believe, okay, now we're going to also see here another move further up, I probably will take the Russell as my symbol of choice to trade this opportunity, to anticipate basically that prices will continue to go up. And for the next couple of weeks, yet the Russell is still close to this broken resistance level, basically finding support here. Because once resistance is broken, it will act as support. As support. All right, so that's my 5 cents for the Russell. Okay, so let's move on. Oil, USO, yeah, to me still untradeable. Yeah, it is yeah, very volatile to say the least. Prices are jumping up and down 5, 6, 10% a day if you take it into account overnight action as well. We just filled this gap here pretty much. So prices came up to fill this gap here, this down gap. Down gaps are bullish setups. This one has been filled. And one may say, okay, this gap is now closed. Maybe the market has done its job, close all the gaps that markets like to close gaps. Maybe now it's time for retracement to the downside. I think there's a good possibility for this, that we will see a bit of a move further down. Prices are extended. I believe in the long run, these are price levels which are not sustainable, but I don't want to get into fundamentals. So we will see eventually a drop to the downside, but who knows, maybe another push higher first and then down. This is a bit, this of course is unclear. But, at least it's noteworthy that this gap now here has been closed, or pretty much closed. Like, maybe a couple of cents are missing, but we'll basically close this down gap here. The market has done its job. Maybe you're going to see a bit of a retracement. That's my theory. In USO, I will not trade it, but at least this is what I'm seeing in this symbol. What about gold? So gold slowed down, a bit surprising to me last week, but it slowed down its recovery move from this bigger retracement here. Now, trading at level 4 pullback, you can see it here. And I think it's at an interesting price level. So last week it was up here, more extended for 450 around, now 433. Well, who knows? I don't think we're going to get down all the way to this level here. That, to me, I think it's a bit far away. But I still believe the trend is very much intact. And if it is, maybe entering at current price levels is not the worst idea. Maybe even with options. Options are very cheap in gold right now, with only 2.5% premium for options for 30 days of expiration at the money. So maybe a long option. Not the worst idea. Anticipating that this gap here and this gap here are still unfilled. And once again, this is unfinished business in the market. The market likes to fill this gap. And if these gaps were to be filled, of course, not all gaps will be filled, but many of them will, prices would need to come up either to the 658 level to fill this gap, or the, where's it, 489, 490 level to fill this down gap here. All right, what about silver? SLV. Yeah, silver always being more volatile than gold. And what's interesting here is that we're approaching this blue line down. Here we said, hey, this is somewhat of a sideways channel. And within a sideways channel, trades are possible, especially if the sideways channel is quite wide, which is the case here. So it stretches from, I don't know, 65, 63 even, all the way up here to 85. That's a big channel. Let me just measure this out. That is how many percent? Yeah, 23%. That's huge, yeah. And these are tradable. How? Well, in this case, or in every case, I would always trade with the trend. It's just, I like to stack my odds. So the trend here is bullish. Even we're consolidating right now, but the overarching trend is bullish. All right. So this means long entry. When would be a good long entry possible? Well, when we are approaching the lower end of this sideways channel, and where prices are right now, they're fairly close to this lower end. So I think maybe you're scaling into a long position, not the worst idea here, anticipating that prices will possibly, of course, no guarantees in trading, possibly revisit the upper end of the sideways channel. For this, they would need to come up all the way to like 84, 83. All right, so that was silver. And lastly, Lastly, we had Bitcoin. Yes. Okay. So Bitcoin, please focus your attention on my beautiful drawing, which I have on the chart here. And I'm going to turn off Rush just for a second here, just to see this a bit clearer. Okay. All right. What do we see? Well, we talked about Bitcoin, I don't know, for how many sessions now? A few months at least. And we called or mentioned that this price level here, 74,000, 73,000, all these related levels, these are super crucial. And we can see what happened. Price broke blows came up to this level, now acting as resistance, push price further down. Up again, push price further down. Up again, a little push down. And finally now, the break above the level. If you look closely, these last candles here, they are completely above these levels. This cluster of resistance. I think this might be it, and this could be the beginning. Because you'll see, I can be wrong, and I have been wrong in the past, actually very recently as well with some of the trades we called out yesterday. But I think it's looking definitely better right now that we cleared this level. If we can sustain above these levels, I think the bulls will come back and charge, and we may see a recovery up to perhaps this resistance level here at 94,000, 97,000, or perhaps even all the way up here to 109,000. So at least this level has been cleared. That's a good sign for the bulls. All right, and we're going to see next week what will happen with Bitcoin. Let me just quickly check what's happening on the live market. Of course, Bitcoin trades 24/7. Yeah, we at 77,400 right now. All right, so pretty much still in the vicinity where we closed on Friday. All right, so with this, let's take a look of what happened to our picks from last week. First off, before we do, I want to clarify something real quick. So we picked 8 symbols last week, yet in my list here are 9 symbols. So what I've done, and maybe you can give me some feedback if that's good or confusing. I'm looking for your opinion there. I have added 1 symbol to this list on actually just today. But this symbol here is this one here, low blows or low blow companies limited. Not just for the fun of it. This was actually our trade of the day from our Tuesday session. So every Tuesday we have a session called Lunch and Learn. It's at 12 p.m. Eastern time. And we've picked this symbol as a potential trade idea on that Tuesday. So I thought maybe, we could also add it to this swing trading list. I think at least one user asked for this because she didn't want to rewatch the entire Lunch and Learn session to see what the trade of the day was. Maybe I can just add it here, or as an alternative, we can just post it in our Discord channel. Maybe give me some feedback by email or perhaps in the Q&A box of what you think we should do with these trades of the day from our Tuesday session. So it was low blow. So let's start with this one. Low blow. What do we see on Tuesday? Well, nice symbol. It's a Canadian company on the TSX, the Toronto Stock Exchange. It came down here to key support, and we thought, hey, this could be potentially a nice opportunity to scale into a long position, anticipating this overarching uptrend to continue. Worked out quite nicely so far. So we're now, at 62 in a small profit. I think this may continue into the next weeks, this upwards momentum. So that was low blow. NML, the Neuberger Behrmann Income Fund. What a name, man. Nice trade. We picked it last week. Beautiful setup. A fund that pays dividends every month. Yet had some really nice momentum. So you could double dip, you could collect a dividend, and you can gain on price. Price move up. We came down here to this former resistance level. Prices bounced up from there nicely. Friday was a down day. I wonder if that was when the dividends were paid out. Let me just quickly see if that was the DivX. I probably can't see this now because, of course, there will be a dividend adjustment at the DivX day. Prices come down. Maybe that was the reason for this. I will double check this. Maybe on Tuesday we can discuss this a bit further in our Lunch and Learn session. Moving on. Now you have to be strong. RTX Corporation. Oh boy, I was so hopeful for the symbol. Oh, yeah, it did not work out. In my defense, so the setup was completely valid. I would trade the setup over and over again. It's in a long uptrend, nice level for pullback as per trend radar, down to a key technical level. But we called it out last week. There were some warning signs. And warning sign number one, of course, and we mentioned it, we have similar results. Of course, Tuesday markets dropped already because the that was mentioned in the earnings was not so positive. Prices dropped down as a result of that. If actually that was warning sign number one, that earnings were coming out. Warning sign number two is that this setup was not the cleanest. I liked it, but it was not the perfect setup. And the one main reason why I didn't deem it as perfect, even with perfect setups, there are no guarantees, by the way, is that this support level, it didn't hold beforehand. You can see it was broken a little bit here, versus came down a little bit further, broke below support, and then came back up. So it broke before, perhaps a sign that this level weakened, and we can see prices drop below this level, not trading a bit lower. Not the end of the world. It's a level 5 pullback now on trend radar. If you are in this trade, and this is just my opinion, I'm not in this trade, so it's easy for me to say, but if you are in this trade, I would hold on to it. There's another reason why I'm saying this, because also the ETF. Well, first of all, I would hold on to it. This is a pullback which has happened in the past, and then the overarching uptrend resumed. If you go down to the past here, just to give you some reassurance, just try to find the last level 5 pullback, which we had was here. So you can see it here. Prices came down here, also 4 levels down trend radar, and here too. If we measure the distance that price traveled from up here to down here and compare it to the percent loss from up here to down here, what do we see? So I'm going to measure this one out. So from top here, give or take 2 down to the level here, it's about 16, 17%, like 17.5%. All right. That's actually not bad for a stock. That would be bad for an ETF, but for a stock, that's not really that much. Yeah, we've seen stocks with much bigger retracements in uptrends. That's reassuring. And then if you measure the pullback here from top to where we are right now, that's around 20%, somewhat comparable. So if you are in this trade, this is all to say, I would personally still stay in it because we're also hitting a key level here, this form of support level here at 166. I would put my stop maybe at 164.65. If we lose this level, I think it's going to go further, but it may still recover as we've seen here. Another interesting fact is that the ETF, so of course, RTX is in aerospace and defense. The ETF that tracks aerospace and defense also pulled back. I guess many stocks in that ETF were affected by that pullback because, a rising tide lifts all boats and vice versa. A declining tide, if you want to call it like this, puts all boats further down or all stocks further down. That's probably what happened here. But the ETF also is at a key support level where this symbol is in. We're going to see it a bit later in our scanning process. Okay, I digress. Let's move on. Okay, we had low blow. Now FTI. All right, so FTI was, for the first time, I believe in our scanning session, a symbol that we picked on different criteria. Because here it sufficed to us that we were in a long-term uptrend with a pullback. But as you can see, this pullback does not coincide with a key technical level. And it worked out nicely. First of all, prices came back up. And we took this trade, or we took this setup, or put the setup into our list, because the next technical level is so far away. It's really not in play anymore. We'll all be down at 47. I believe prices will not get there anytime soon. And I don't want to miss out on RTF. It had a nice pullback, and you can see this would have worked out quite nicely afterwards. Moving on, Coke. All right. Yeah, nice one here. Prices didn't come down all the way where we wanted it to go. So this was probably our entry level here. Nonetheless, a nice recovery of this pullback. We had a level 4 pullback here, now trading a bit higher. Berkshire, yeah. Remember, I actually did not take a trade note, if you remember last week. So otherwise, this would be filled here. Because I had a bad feeling about this from the get-go. I had a good feeling with RTX, which went down for Berkshire. I had a bad feeling. It was still in our list, but you can see prices did not hold at this level here. And I think now there is a chance you're going to go all the way down to 455. And this level better hold if you want to keep this uptrend intact. So good thing we were cautious on this one. Atmos Energy Corporation, nice bounce here. From our ideal entry point, this was tradable with a stock in a strong uptrend of a level 4 pullback of former resistance now acting as support. And then we have Antero midstream, good one too. Prices pulled up from our entry area to higher price levels. And finally, AbbVie. AbbVie suffered, like many healthcare companies, from the entire sector declining. Of course, there's sector rotation going on right now. It broke below support here, but there's a bit of hope. In our dashboard, this is a feature perhaps that not everybody knows about. If you have the sector column enabled, this one here, first of all, you can see what is the sector this stock is in. In this case, healthcare. We knew this. But you can also see what is the ticker symbol for the sector and what is the trend of the sector ETF and the setup of the sector ETF. If you don't see these information here, you have to go to the menu, scanner, and enable sector information, this setting here. See this? So enable this. I like it enabled because then you can click on the sector here. It will open up on the chart. You can see, okay, interesting. XLV, the sector ETF, is in a bullish trend for 122 days. We see it right here. Currently at key support, long bounce setup. So my theory is we will see a bounce. It's a theory. Don't hold me to it. I can be wrong. We will see a bounce in XLV to higher price levels. And if we do, a stock like AbbVie will profit from that because, you know, the rising tide will lift the boat of AbbVie as well. And AbbVie will benefit from this. And AbbVie might come back above this level. So, I mean, if you're in this trade, it's your call, of course, but maybe put your store a bit further away. If the sector bounce happens, maybe AbbVie will profit from this. All right, perfect. So, guys, with this, Nicholas, are there any questions right now?
Let me take a look, Daniel. One moment.
Yeah. How's your headset, Nicholas? Nicholas helped me out yesterday. Right before our webinar about prop trading yesterday at noon, my headset broke. I was like busy. I couldn't talk anymore. Nobody could understand me. So Nicholas gave me his. He's in the office next to me. So do you still have a functioning headset? You sound good.
Yeah, does it work?
It works well, yeah.
Okay, good. And we just had a comment from Edda saying that they wanted to know what the trade of the day was in the lunch and learn, if you remember.
Perfect. So yeah, I think I'm gonna add this one there. Maybe put in the trade notes of that trade of the day
It was
here.
yeah,
it comes from the it came from the lunch and learn session, not from the power scanning session. Okay.
And that's it. No, we don't have any questions.
And Albie says DivX date for NML was April 15th. So it was not the dividend discount there. Okay, fine. That's good to know. Great. All right. So, well, in that case, let's go back to my slides. Let's start scanning. Of course, this was last week. Now let's try to find some nice setups for this week. So what we typically look for. So these are the scans that I typically run. There are many more scans possible, the dashboard, but the one we typically run in these sessions is as follows. So first of all, we are looking for a long entry. So we want to trade in the long direction. There is an upside bias in the stock market. Why not take advantage of that? This is not to say that there are no short opportunities in the market. Of course, there are many short sellers out there, but we're going to keep our life easy. We're going to try to buy a stock, not short sell a stock. All right, so for this, it is nice if the symbol at question is already in a healthy and sustained and smooth uptrend. The longer the trend continues, the better it is, in my view. That's a precondition. The trend is your friend. The chances that a trend will continue are greater than the trend reversing. So we're going to bank on this observation. But of course, as trend traders, there are good moments to enter into a trend trade and not so good moments. For example, not a perfect moment, in my view, would be when things are very extended and prices are really far away from the averages. You can see it here, where the candles are. They're quite far away from these lines here, which are the averages. So we call this extended. Prices are far away. And if prices are extended, there is always a greater risk of a pullback. So prices coming down to the mean, basically a reversion to the mean. Therefore, I like to wait for a pullback in the first place, for this reversion to the mean, and then look for entries. Ideally, in an ideal world, this pullback is not too small and not too big. Not too small to not be meaningful, and not too big that we may threaten to see, or maybe threatened to see an entire trend reversal. So we call this the healthy pullback. And in our trend radar indicator here, typically what we consider a healthy pullback is either 3 levels of red, 1, 2, 3, like here, this one here, or 4 levels of red, 1, 2, 3, 4. That's a healthy pullback, right in the sweet spot, not too small and not too big. And then the kicker, ideally, we want this pullback to coincide with a key support level, with a technical level on the chart. Oh, and by the way, this is something I wanted to mention for a long time. You may notice on this example here, but also on our chart, that our levels have different colors. Let me just hide the trend here. You can see these different levels here. They're either reddish or greenish. I want you from now on to forget about the color. Imagine all these levels are white, and maybe in the future version of the dashboard, we're going to actually do this, because I think it's people get stuck with the color of these levels. So, first of all, they're possibly badly colored, because up here we have resistance. It's green, but resistance may mean that prices will go down and bounce off from it. So perhaps the color is not the best chosen one. And here for support, it's red, but price may bounce up to the upside. So maybe it's more of a bullish setup, and the color should be green. But more importantly than this, it actually doesn't matter what the color is in the first place, green or red, and even if they're correctly colored, it doesn't matter. What matters, that's really important, is from where we are approaching the level, from where price is approaching a level. If we come from below to up to a level, like this case here, it will act as resistance regardless of the color. If we come from the top down to a level, it will act as support. It doesn't matter if it's a green level or a red level. This is the only thing that matters, from where price comes to a level. Don't worry about the color. I kind of wish we would have colored all these levels white to begin with, but whatever. That's done. And I'm hesitant to change it now because people are used to it, but this is something I've realized over the years. Don't worry too much about the color, because we got questions about this all the time. So taking this standpoint, from where price is coming down here, down to this level, we're coming from the top down to this level, it will act as support. Okay. In this example here, it's a bit different. Prices comes, this setup here, from where do we come down to the level? From the top, down from here, down to this level. The level is green, but it doesn't matter. The color doesn't matter. We're coming from the top down to the level. It will act as support. This is what I want to look for. We're coming up, we're coming down to a level. The color of the level doesn't matter. Okay, so how can we scan for these setups? Remember, long-term uptrend with a pullback down to a level. How can we scan for these setups? Well, we're going to go to our dashboard here. I'm going to go back to our all symbol selection here. And the first thing I'm going to do, actually, real quick, I'm going to hide some of these columns here just to make it a bit more intuitive. 1 second, guys. I have so many columns in here, so I want to keep it clean. And maybe also the expression. There we go. Okay. Oh, one more. There we go. Perfect. Okay. So what do we see here? We have one column called MA Rush. That's a bit of a cryptic name, but this column is named after an indicator. This one here on the chart, which shows us, let me just pick a different symbol, maybe this one here, Alcoa, which shows us directly on the price chart whether we are currently bullish or bearish. That's what the indicator does. It prints these labels onto the chart. If the last label on the chart is bullish, then the current trend is an uptrend. If the last label on the chart is bearish, like in this case here, last label is bear, then the current trend is a downtrend, is a bearish trend. Now, you remember, a precondition for our long setups is that we are already in a bullish trend. We can filter for this by going down, going to the left-hand side here to MA Rush and activate the filter to the right of it and select. Okay, we want to find symbols which are currently bullish. Once I do this, you can see every single symbol in our scanner. It's lightning fast, it takes less than a second, has a green arrow pointing upwards with a number next to it. If you look down here, currently 3,375 symbols are bullish. of our 6,207 symbols that we're currently tracking. But, sometimes it's not enough for me to just be bullish, especially if the trend was just established. Like in this case here, AAON, we are bullish for only 52 trading days, 52 candles. I know this, not just by counting these candles backwards to the label, that's one way to do it, but by simply looking at the number to the right of the arrow here. To me, the longer a trend has been going on, the better it is. So what I typically do is I use my filter here and select a more strict criteria. For example, bull signal for more than 500 trading days, meaning that the trend needs to go on for at least 500 trading days. You can see now every number to the right of the arrow has a number greater than 500. Like, for example, AbbVie, a trade that we had, 500, more than 500 trading days bullish, currently in a deeper correction. All right. All right. That's step number one. Step number two is you want to see a pullback, a healthy pullback in the sweet spot, level 3 down or level 4 down as per our trend radar indicator. Well, we have a pullback column right here in our scanner as well. We can activate the filter to the right of it and select level 3 or level 4. Once I do this, look, of our 6,207 stocks, right now only 167 stocks are in this particular situation. Let me find a good example. Alamos Gold. Actually, this was one of our trade ideas at some point. Beautiful. Look at this one here. Nice uptrend, currently pulling back 4 levels. 1, 2, 3, 4. I mentioned this. Gold looks interesting right now. I believe there might be another leg further upcoming. So Alamos Gold, perhaps not the worst idea. Or we just see something else, a bigger name in here. 1 second, I'm going to try to find something that is a little bit more known. Cardinal Health. Long-term bullish, 1,018 trading days bullish. Now a level 4 pullback. Nice. But ideally, we would love also that this pullback coincides with a technical level on the chart, like a level. We're approaching this level from the top. Well, let's enable our levels indicator here called Liquidity IQ and see. What about Cardinal Health? Actually, this is kind of near this level here, near this reddish zone, a bit below, but nonetheless quite kind of interesting. What we can do in our scanner, we can filter for stocks which are currently near either a red level or near a green level. Once again, the color doesn't really matter, but the two settings for this is this one here, long bounce and long break retrace. Once I do this, look what happened. Only 11 stocks have survived this very strict scanning process. Let's see which ones are these stocks. So now I'm going to sort by trend duration. And the first one that comes up is this one up here, McKesson Corporation. Let's check it out. Healthcare, another healthcare stock. If you don't believe me, enable your sector information here. See, healthcare. I like it for various reasons. First of all, we are coming down to a key support level, and we just closed this down gap. This happened last week. So down gaps are, this up gap from there to there. Up gaps are bearish patterns on your chart because gaps tend to get filled over time. Market has left some unfinished business. It likes to, fill these gaps over time. This has happened last week. And prices are coming down to this key support level. And this is further supported by the fact that also the healthcare sector is approaching support. You can see long bounce here in the healthcare sector. And once again, similar to AbbVie, if the sector bounces off the level, I believe McKesson will also benefit from this. And if you combine all this with the fact that, hey, it pulled back nicely within a strong uptrend, bullish for more than 1,000 trading days, now 18% down, nearing key support, level 4 pullback on trend radar. This is an interesting stock for next week. So I'm going to go ahead and add this one as our first stock to our watch list. I'm going to create this new watch list. All right. Weekly swing trades, column 2026-04-25. There we go. Great. I'm going to add McKesson to this list. By the way, Homer used to work for McKesson back in the day. A little fun fact. In Vancouver. Yeah, I was in Vancouver. Okay, so but of course, McKesson, a big US company with offices all over the world. And what I'm going to do now is that I will share this watch list with you guys, and I will unshare the watch list for March 21st as per our agreement. Done. Okay, perfect. So McKesson, an interesting candidate. Let's move on. The Leonardo Spa Corporation. Okay, this is an Italian stock. Okay, let's have a quick look. A bit of an exotic one, but I want to see what this is all about. Nice uptrend. You can see it here. Now hitting key support here with a liquidity capture at the last bar. Well, it's interesting. What's the sector of this stock here? Industrials. And this one is in helicopters. Okay. Aircrafts. All right. I don't really know this stock. It looks interesting for a pullback right at support here with a liquidity capture even at the last bar. Let's add it as well. Why not? All right. Next one, Novartis, healthcare as well. Yeah, I don't have too many healthcare stocks in my portfolio. I think McKesson was, I think maybe the better candidate. If you like both McKesson and Novartis, I would just pick one of them. You always want to be diversified. Yeah, don't put all your eggs in your basket. Same thing here for Protagonist Therapeutics. Probably mispronouncing this badly, but also this one pulled back. Also in the healthcare sector, maybe be careful with that one. Just pick one of these. All right. So let me see what else we have. Here we have a gold stock down here. I'm going to skip a couple of them because I want to change my criteria a little bit. IM Gold Corporation. Yeah, interesting one. I like it. Prices pulled back to this key support level in a strong uptrend level for pullback. If you believe that gold, will bounce, I think these stocks will bounce as well. And I think stocks like this, which have been bullish for a long time, more than 500 trading days, you can see here, we've been bullish in this stock. I think when gold recovers, this one will recover as well. So I'm going to add this one to our list. And what I like about this one is the price of this stock. Look at this. Only $16. So you can do a lot more scaling with your trade here. If you look at the GLD, it's not the case. The GLD, just for the fun of it, GLD here, much more expensive at 433. So even if you want to do something with options here, buying options is very expensive because you always have to account for that an option contract is for 100 shares. So in this case, a $43,000 investment, options will be expensive. All right, so let me move on a little bit further. What else do we have? I'm going to change it up a little bit. Let's do another scan. So what we've done so far is we looked at stocks which were bullish for a long time. I want to keep this, and which had a pullback and which matched a key level on the chart. Let's just for once get rid of the pullback criteria because sometimes it will filter out too much and you're just going to miss out on some things. So let's have a quick look what happens then. So we now have 43 stocks here. And the first one that comes in here is Dollarama, a Canadian dollar store. Yeah, but that would not be something for me. It's a bit of a too deep pullback. It's a strong uptrend, but I don't have that much faith in this brand new support level here. I think price may come down all the way to this level. So I'm going to skip this. We had McKesson. Next one is Sun Pharma. Let's have a look here. Oof. Yeah, interesting one. It's an Indian stock on the Nifty, I believe. How would you, let me just quickly take away my level tiers. 1 second, guys. What's going on? Oh, this is the target. I'm going to take the target out. 1 second, guys. Just to make this a little bit more clear. Is it this one? Okay. No. Not sure where this target comes in here. Actually, let me reset. So if you see an issue on the dashboard, one easy thing to do. Oh boy, it's still there. Strange. Whatever. Let's ignore these labels here. Yeah, it's kind of in a sideways consolidation. Coming down to the lower end of the sideways channel in an overarching uptrend. Maybe an idea to enter long, but I'm going to skip this one too because I don't really know much about this stock. Let's move on. Heiko Corporation. All right. In the also in the long-term uptrend, bullish for 1,387 trading days. All right. And let's see what's going on here. pullback down to a key support level with a liquidity capture event on the second to last bar, on the bar on Thursday. Yeah, I like it. Yeah, for a potential up move, a big drop from the highs here. Let me just see how far that was. That drop, a drop off approximately. Let's measure this out. 27%. That's quite decent for a stock. But you know what? These are the opportunities that you want to look for. And once again, this stock has have a history of these kind of drops. Also from here down to this level here, 23%, similar to this one here. Yeah, I'm going to add it to our watch list for next week. Heiko Corporation. Perfect. All right. What else do we have? Going down. In fact, let me just simplify a little bit more. Let's focus. Let's use our new index column here because there are so many, let's say, foreign stocks in here which I don't really know much about. Let's focus on the S&P 500, the Nasdaq. So let's see what we have in there. GE Aerospace. That's interesting. Okay. Who remembers that stock? Well, you may remember it from a couple of weeks ago. It was our trade of the week when the price hit this level here. You can see it here in our trade notes, I believe. Something is going off this. I need to check this. There's something fishy going on with my notes here. I know we had it as our pick at the time as a potential long entry. We'll double check this. Back here, prices came down to this key level, bounced up nicely, and now look what happened. Down to this key level again. I think once again, that could be a good opportunity to anticipate another bounce off this level here, like rinse and repeat, except that we had in the past before. So I'm going to add this one to our watch list. Perfect. Let's go down the list here. Royal Caribbean Cruises. Also interesting. A bit more risky for me because this one, I think, is dependent a lot on what will happen in the situation in the Middle East right now. I believe they have some boats or cruise ships stuck there in that area. Oil prices are really high, which probably will affect that stock. I mean, it dropped quite a bit. And if you want to speculate, maybe now that's the drop you're waiting for, 30% down. That's at this support level here. Just keep in mind there's another support level right below. So maybe in this case, just wait for this pullback to come down a little bit further and take a shot down here at this lower support level. Oftentimes, when two levels are next to each other, oftentimes the second level below is the more important one. All right, so I'm going to add this one also to our list. It's a more speculative setup for next week. Raymond James Financial. I don't like it. I have to say it as clear as it is. Why? Because here we are not approaching really the red level from the top. We're really coming from below. It's not my cup of tea. I want prices to strictly come from the top down to a level. Here, this support level here was clearly broken before and prices came down and then up. That's not the cleanest setup for me. All right, a few more. Citigroup, long big retrace. That's interesting. Now, what about JP Morgan is doing? Oh, Citigroup, very bullish. Look at this one. What a nice bullish uptrend here. A bit of a pullback. I clearly can see a couple of gaps here. I see an up gap here and an up gap right here. Now, these are bearish signs on your chart. And we take it as at your own discretion. Prices are coming down from the high here down to this former resistance level. We're about to close this up gap here. And hopefully price is going to hold here at this level. We're going to see another move up. If not, this level or this gap here might be in play and prices might come down all the way to this level. Nonetheless, I'm going to add it to our list. And just real quick, just for the fun of it, I know we discussed JP Morgan a lot in our settings. Let's just see what JP Morgan is doing right now. All right. Okay. Yeah, came down also a little bit, but not as bullish as Citigroup. But nonetheless, not bad. There's also this gap here, which might get filled. Okay, so I would not go long JP Morgan right now at this moment. All right, and there's one more scan I wanted to run with you. We started the scan last week, and this scan only requires a long-term uptrend and a healthy pullback. We don't require a technical level to be nearby. Let's just scan it just for the fun of it. So once again, I'm going to go to our MA Rush column here. I select long-term bullish, in this case, more than 1,000 trading days. To be very selective, only 128 stocks qualify for that. And we want the pullback to be either level 3 or level 4. 29 stocks survived. And let's see what we have here. All right. So we have McKesson. We already discussed this one. Moving over. Ensign Group. So look, nope, I don't like it. Right approaching resistance here. Not the ideal long setup. Right against resistance. There's no room there. The Invesco FTSE 100 with a bit of a pullback, but a bit too close to resistance here. Harmon Aerospace. Check this one out. All right. I mean, it looks a bit similar. Long-term bullish. I guess all these aerospace companies, I believe, similar to RTX, I guess, suffered a little bit. But maybe, yeah, it could be an interesting idea if we're coming a bit closer. So here for Harmon, I would like to first to come down a little bit further, maybe to 233, 231, something, and then potentially a long entry. So let's add this one to our list as well. All right. And perhaps one more, which is interesting here, is it's going to go down the list here, skip some of these foreign stocks too. Now, the Hartford Insurance Group, banking. Look at this. An old friend of ours. We've traded Hartford many, many times. It's like a beast moving upwards and upwards. Beautiful upwards trend. Now pulling back down to this key support level. Now, what I like about this one here is that we have a form resistance level here acting as support, one native support level here, and one more here. So lots of support right below price. I think this can be an interesting long opportunity too if prices perhaps come down a little bit further on Monday. So let's add this one as well to our list. All right, and then I have one more example. This was actually pointed out to me in our webinar with my German friends, which I have at 10 a.m. today. It's already done. It's STB.OL. STB.OL, a Norwegian stock, Store brand. I believe it's a supermarket. I might be wrong. Let's quickly see. No, insurance. Okay, insurance in Norway. Somebody pointed this out to me as the potential long entry. We had it before. Look at this monster of a stock. Beautiful uptrend. Not sure if you can trade it. Perhaps with interactive brokers, you can do it, which is a multi-currency, multi-asset broker. Nice pullback now down to these support levels here. Also, this one to me could be an interesting candidate for a long entry. So I'm going to add this one as well. We had it before in our list, so let's add it one more time. Perfect. So let's have a quick look at what we've picked so far. Our weekly swing trades for today. Oops. Here we have 10 stocks. Wow, a lot. Okay. Let's go through it very quickly. So which ones are my favorite? I like McKesson. If healthcare is bouncing, I think McKesson will benefit from this as well. Nice one. So I'm going to add this as my
this
trade
is a
note.
good time actually for Massa's question. So that chart you were just on.
McKesson?
Yep. Let's say price is going down to support. It's near it. But then it starts going up before actually getting into the zone. What criteria do you use to determine to buy at that price? And
there's a lot of discretion out there. I personally am very conservative. I typically wait for price to really get into this level, knowing that I may miss out on this trade. That's my style. I really don't want to chase anything or go into something prematurely. But oftentimes this kept me out of a trade too, which is not great. So I had some opportunity risk there, which to not get into this trade. What you can do right now or on Monday when the market opens is to scale slowly into a long position. At least then you have your foot in the water, as you may say in German. Do we? I don't know. And then scale in another time when prices go further down. So both approaches are feasible. I personally do I rather wait, be more selective. Especially in the stock market, there's so many different stocks to trade. You can really wait for the perfect setup and the perfect entry price in that case, and then get in. But it depends on your trading personality.
Thank you.
All right, Heiko Corporation. All right. I kind of like it. It's a sharp drop down here in industrials. But it's right at this level with liquidity capture on the second to last candle. And there's not really any other level nearby. The only thing here, now that I look at it a bit closer, this level is like brand new where it stopped right now. It just started on Thursday. You can see this little line here only started on Thursday. It's very fresh, maybe not as established. You know what? I'm gonna skip Heiko with other ones. Hormet Aerospace. I like it. I think prices will come down a little bit further. If they do, this could be an interesting entry opportunity off a level 3 pullback on our trend radar indicator. So let's add this one to our trade notes. All right. Hartford Insurance Group. All right. Also this one, yeah, long-term uptrend. Maybe it comes down a bit further on Monday. Yeah, interesting long entry. Okay. Leonardo SPA, it's Italian stock. I'm gonna skip it too. I have no idea what this helicopter stock is up to. It looks okay from a technical point of view, right at support here with the liquidity capture. The only thing is that resistance is not far away, only a couple of points higher. Let's skip it for now. Story brand, I like it. We had it before. I'd say rinse and repeat here. Let's try to get into this one before on this pullback, banking on the fact that this long-term uptrend is going to continue in this Norwegian insurance product. I wasn't actually able to get into this trade when we called it out a couple of weeks ago in March, but this time I'm going to try to get the permissions of Interactive Brokers to actually trade this stock. I'm going to let you know what my experience was with trading this Norwegian stock on Monday. All right. GE Aerospace.
Daniel, actually, sorry, I missed. I wasn't paying attention. Could you go back to HIG?
Yeah. Hartford. Yes.
Did you say when would you sell at the resistance or the top of the last peak?
Probably here. Yeah, I wouldn't wait until it gets right there. That's, sometimes the bounce happens earlier. Yeah, something here. This is swing trading. So if you buy and hold, just hang on to the stock forever. But swing trading, yeah, probably here around this level, 141, maybe. Go for a small gain.
Thank you.
Good. All right, so Stora, GE Aerospace. I like it for a rinse and repeat. I want to add it to my list as well. I don't know what happened to my trade note here. I'm going to have to double check this. Maybe there's a small bug with the trade notes. I'm pretty certain we had taken a trade note before. Whatever. Okay, close. Royal Caribbean Cruises. You know what? Too speculative for me. I'm going to skip this one too. It's just too much uncertainty going on in the Middle East, so I'll stay away. More on the risky side. Citigroup. I'm tempted. This is one of these stocks where if this gap here gets filled, we may see a bounce to the upside. I'm going to add it to our list. All right. Very bullish stock. We called it out in February the last time where prices were at 124. So, no, 110 it was. I had 110. Now price at 127. Nice trade that would have been. So let's add a new trade note here. And finally, IM Gold Corporation. Yeah, I like it. I believe that we're going to see a bounce in gold. If we do, this company is probably going to profit from this as well. Nice pullback, very nicely low price stocked. I believe there's even options available. Yeah, there are probably only monthly options. Let me just quickly see what kind of options we have. Yeah, monthlies. Nonetheless, you have to see if what options prices are, how big the spread is. But maybe doing something with options here as well could be of interest. All right. IM Gold here. I'm going to add it to our list. Oh, no, it's already in our list. I'm going to add it to our trade notes. Sorry. All right. There we go. Okay, it's already there. Oh, no. Wow, this was a year ago. Look at this. That's so funny. A year ago, I was just wondering, hey, this is today's date. It's not. This was last year, April 27. We called it out at $6. Wow, now at 15. That would have been a nice trade too. So yeah, for sure. That's a stock that brings back good memories. Let's add it again. Boy, we've been doing these scanning sessions for a long time, huh? Seeing all these old trade notes in our list. Perfect, guys. Well, these are my trades for next week. Hopefully, they will work out. Fingers crossed. And now it's time for you guys for your questions. And before we do, real quick, guys, if you like this dashboard, please give it a try yourself. I personally like to use it a lot because it's so fast. You can see when I put these filters on, it takes less than a split second to get the results. It's lightning fast. It's designed for speed. It's designed to help you at these interesting swing trading opportunities. So give it a try at tradingindicators.com/view, 1 week full trial, all the features enabled. You will not be charged for the first week, only if you want to stay on board afterwards. But of course, you can cancel at any time during that first week. All right. So, guys, with this, let's talk about your symbols. What do we have?
We have Intel, was a
Oh,
request from
yeah,
before.
yeah.
Olga says it's overbought. What's the possible pullback location?
That's Yeah. I mean, Intel, this is a great candidate. I think, well, first of all, Intel had earnings. So great earnings, a great outlook for the future. Prices jumped up. And I can't believe I didn't even pay attention much to Intel. I know back in the day, it was very low price, like depressed basically, and AMD was like outpacing it by so far. Can see it here, prices went down to 19. I believe we mentioned something, hey, too big to fail at that point. Maybe I get it wrong, but I definitely remember these depressed days here. It has risen since then more than 300%. Look at the statistic here. When I put on the 52-week low column, 335% risen from its low point in the last 52 weeks. Wow. That is a great stock. Yeah. Wow. Amazing move upwards. But yeah, now, I mean, I'm tempted on Monday. I'm going to check out option prices to do a short play here. Fully overbought, 100%. If you put on the RSI on, where's the indicator? RSI, the relative strength index. It's probably in the, it's 82. Yeah, it jumped up, huge gap, up gap, which is bearish to be filled. Maybe something of credit spreads, if options are expensive, could perhaps be an interesting idea. Anticipating a pullback down to the average level. So it's really extended right now, huge gap. This kind of reminds me of Oracle. I don't think it will be an Oracle in the end, but I think we may see a bit of a pullback there, or at least prices will stabilize here. Maybe a call credit spread, not the worst idea, which would be a bearish play. Something perhaps we can discuss in our lunch and learn sessions on Tuesday. And real quick, just to show you Oracle. Sorry, Nicholas, real quick, because since I mentioned it there, why did I say it's similar to Oracle? Well, look what happened here. Huge move up. Oracle had some news about the data centers and people, I think OpenAI investing into them. Huge move up. Look what happened here. I don't think this will happen with Intel, but I think we will see a bit of a correction and consolidation along the high levels. That's my feel, at least, for Intel.
Thank you. And the next one we had requested twice is GEV.
Yeah.
It's bullish instead of GE.
GEV. GE Vernova Inc. in the S&P 500. So good that we have this column now here. I would have never guessed this stock. Yeah, similar case here. It's like extended. I will not chase this one. Will it go higher? I don't know, maybe. But there's also, once again, an up gap here, which might get filled over time. So I personally will not go long at these levels. That would be chasing the trend. I would wait for a pullback and then potentially enter. At least that's my feel for this one.
Thank you. And NVIDIA.
Yeah. NVIDIA. In the S&P 500 and the Nasdaq 100, of course, we knew this already. Yeah. NVIDIA. Wow, hitting resistance. Interesting. Look at this. Right at resistance here with liquidity capture. Would I enter on Monday long? No. Right at resistance. I think that's dangerous. If you break above, would I enter? Maybe, because then we clear this level. But right here at resistance, especially also with a liquidity capture event, which are these events here, and you can see oftentimes they happen before we see a bounce, like these shaded areas here. Yeah, but it's nice to see that Nvidia is bouncing up again finally. But yeah, at this level, I would not buy right at resistance. I'll wait for a pullback. And talking about this, what about Amazon?
And the
So
question
happy.
here,
Yeah.
Ron says, what's the opposite of a dead cat bounce? I would say it's like a parabolic top, right? The blow off top is how they call it usually.
Oh, dead cat bounce when we are bouncing off support to higher levels, and this
Like
a
something that
blow off
drops
top.
really, really hard and then
Yeah.
bounces. And what's the
Yeah.
opposite of that?
Yeah, a blow away top. How do you call it, Nicholas? Yeah, this blow off top now.
They're called blow off tops or
blow
parabolic
off tops.
tops.
Okay. Yeah. Perfect. Yeah. Yeah. Maybe gonna have one day a webinar about like trading jargon for all these different terms. Could be fun actually, yeah? Have a little glossary. Maybe every Maybe Nicholas, we can put this down for our lunch and
Yeah.
learn session. We can add a new section here. Let's discuss some trading terms and what they actually mean. Like, okay, real quick, Amazon, just because it has a similar situation. Also near resistance here, but we came above it. You can see it here. Prices on Friday actually came above resistance. We briefly bounced off this resistance level for liquidity capture. Prices came down a little bit, but then Friday moved up and now trading at all-time highs. Amazon, which makes me very happy. I'm a long-term strategic investor into Amazon, so I like to see prices still be recovered. Okay, what else do we have?
SMH.
Oh, SMH semiconductors. Yeah, probably also up quite a bit. I can only imagine. Yeah. I wonder if they benefited also from it. For sure they did. Intel, I believe, in that ETF. Also, AMD is up a lot. Yeah, would I chase it up here? No, I would not. It's a nicely bullish stock, absolutely. Or ETF in this case. But I would wait for a pullback. Like a trend radar here, all green. You want to wait for these pullbacks and then get in cheaper. Like at these extended levels, probably not.
Thanks. And the next one is JD.
JD. All right. JD.com. Okay, let's have a look. Bearish for 177 trading days. All right. Oh, I don't have a good feeling about this one for the long side. So what I see here is a bearish trend. We broke below the support level back here, then down. Now the retracement back to this level. This is our classic bearish zone break retrace setup. I think we're gonna see another leg further down. At least that's how it feels like right now.
Thank you. And then another symbol is what's this one? Store brands. Could you check Unity?
Unity, yeah.
Unity
And
software.
I'm just reading one quick comment here from Aubrey about Storebrand. He says it's listed in Frankfurt and the Frankfurt Stock Exchange as well, and the chart does not look as good. Let's quickly have a look at this on TradingView, skt.ff, just for the fun of it, since we had this as our trade of the one of our watch list. skt.ff. Where do you see this one? Store. Let me just write this out. Store. Ah, just 1 second. This one here. I guess it's here. This one here. That's the one in front. Oh, it still looks pretty good to me. Oh, definitely the trend is the same. The pullback not as big, but nonetheless. No. But earnings coming up. Ah, look at this. We have earnings coming up on April 29. Okay, that's interesting to us. Please keep this in mind, guys. At least there's earnings coming up. We also had dividends at some point here, and earnings now on April 29 on Wednesday. Okay, interesting. Okay, thanks, Aubrey. But I still like it. Still a beautiful uptrend. Now level 3 pullback. All right.
Next one's Unity software.
Yeah, Unity. Oh boy, software. Whenever I hear software, I feel like, oh boy, how far are they down? Unity software. I think the entire software industry is struggling. Yeah, actually not as bad as I thought. I mean, it is pretty. They lost. Actually, scratch this. I just looked at the. It's because it doesn't seem that far, but they lost how much? 67%. Yeah. Many people say that this is a once in a lifetime opportunity to enter or to invest into software stocks in the long run because they might come up again. This is just a big correction, and all the software stocks are collectively down, which is a good sign. If just one stock would be down by itself, but the sector would be up, that's probably a bad sign for that particular company. But if the entire sector is down, if you just look at the IGF, I'm going to come back to Unity in a second, or IGV, the software ETF here, you can see, yeah, it's down. Definitely. We lost quite a bit. Not as much as Unity software, but the entire sector is definitely down. Of course, ETFs are less volatile than individual values, but 37% down. The entire sector. A bit of a retracement here, but the trend is bearish, and we just hit resistance here. Ah, I I personally would not invest into Unity. People say, hey, once in a lifetime opportunity, but not for me, I think. More bearish. Big drop here. Now we bounce off this level, which is at least good, but there's still far to go to get back to the levels. Yeah, a bit hard. Maybe down here at 16. Maybe if we come down one more time, take your shot at this key level and then hope for the bounce. But right in the middle here, we're bearish. This might just be a correction within this bearish move. All right. Anything else?
Hey,
Let me
Daniel, I
See.
have a
check.
couple of questions
We
here.
have here.
Homa.
Yes,
Hi. How are
surprise.
you?
I made it. Good, good. I have a couple questions from users here. So the first one's about earnings. Can you explain whether it's better to get in before earnings or wait to see what happens afterwards? So what's sort of the magic sauce around that?
I don't think there's a magic, so I think it's a question of preference. Of course, earnings introduce volatility and uncertainty because you never really know, right? Who would have thought that? I'll give you an example for both. Let's back to Intel, INTC. Of course, they had earnings yesterday. Well, of course, you could have said, I could have said, I knew Intel's gonna fly up because I had some inside information. I want to get long Intel before earnings. And yeah, wow, amazing. You won the lottery. Perfect. But of course, it doesn't always have to be like this, right? Sometimes it goes down this much. So I guess it depends on how much of a speculation you want to do. But then you may say, maybe I can get in with options, a risk limited earnings play. But if earnings are coming up for a big company, this volatility that will be introduced to the earnings, that's priced into the option. Options are going to be expensive. So uh, it's really a question of personality. There are pros and cons for either side. If you're more on the conservative side, you should wait until after earnings. And you rather, skip these big winners here, but do slow and steady instead. Yeah.
Perfect. I have another question from a user here. You went through the symbol for Royal Caribbean. Can you bring
Yeah.
it up again? Just to explain why you didn't think it was a good play. Is it because it's too choppy or?
Yeah, it's very sharpy, and I shouldn't think like this, but it's very much dependent, I believe, on what's happening in the Middle East, and the situation is so volatile, and this with so much uncertainties. Because I believe, maybe I'm wrong, but I believe they depend heavily on energy prices. Oil is expensive. Some of their boats or ships may be stuck in the Middle East now because of what's going on. Um, just lots of poor uncertainty from a fundamental point of view. This is why I primarily rejected it. And the other thing, from a technical point of view, yeah, it is choppy. Look at these big waves here. And the level it's approaching right now, the support level, and there's actually another level right below here. And oftentimes, at least in our view or experience, if there's two levels next to each other, like this one here and this one here, oftentimes it's the lower level that's the more important one. And this level is not hit yet. There's still ways to go down. So there's some technical reasons, but also some just a gut feeling reason. Yeah, which I probably is not the best advisor. I also said last week that Berkshire, I mean, I didn't like it too much. Actually, disqualified it. It had a valid technical setup last week. I said, hey, I'm gonna bail out of it. I'm not gonna go long here because I was influenced for good reason. In this case, prices broke below this level that Warren Buffett left the company. I think over time the magic will be gone from this, maybe, but it's a gut feeling, so it's not really quantifiable.
Okay, perfect. Thanks, Daniel.
Okay, great. Nicholas, a few more, maybe two or three more symbols, and
Sure,
then
a
we
Groupon.
Groupon.
Haven't heard that in a while.
I still remember Groupon back in the day, maybe 15 years ago. I don't know what I was buying, soccer balls or something in bulk. I don't know. Yeah, it's cool that this company is still out there. Bearish trend wise. Wow. Okay. Wow. Actually, it's not doing. It must have been higher. Yeah, I would have been imagining that Groupon was much more hype before. Yeah. Okay. Okay. Yeah. So it's. Oh boy. I mean, I look at this. Yeah. So this is what I remember. Groupon's IPO. Look at this. Jesus. I'm happy I didn't get into this one back then. Yeah. It's in a huge macro downtrend since its IPO, now trading at super low levels. It's not my cup of tea. I don't believe too much in this business model. Even haven't heard about Groupon or received an email from them in ages. bearish trend. Not for me. So I would not even speculate here for a bounce. But of course, I mean, if you want to speculate, wait for prices to come down here, put a small amount in, risk capital. It's like when you go to the casino, you just want to, see if you're lucky, maybe you see a big bounce, a big 2x or 3x, it's possible. But but it's not the kind of trades that we are looking for typically here. But it's valid if prices come further down. But it's pure speculation. Use it only with your risk capital.
Thanks, Daniel. Could you take a look at Dell?
Yeah. Dell's up to, I believe.
And what did you say about Intel again? It was just it's way too gone and wait for a pullback to the level, right?
That's my idea there. Or maybe I've thought even depending on how expensive options are. Let me come back to Intel in just a second. Yeah, Dell is up to nice. What did we say last week? Didn't we have Dell on our radar too? When we just broke above this level, I think it was already here. Yeah, and went further up. So here I probably said, hey, wait for the pullback. I still say this, wait for the pullback down to this broken level here and then potentially enter long. But for Intel, let's go back to it one more time because it's an interesting case. I think we should look at this on our lunch and learn if the opportunity is still there. It's a huge gap up. It reminded me a little bit of Oracle. Big gap up, jumped up through earnings. I don't think it will turn to an Oracle for a big downtrend, but I believe there is a chance that we're going to see some consolidation going on after the earnings. And an options play like a call credit spread, for example, which banks on the fact that, hey, options are first of all expensive. It's better to sell them than to buy them. And, credit spreads, you want to sell the option, you got to get some credit into your account. And you can bank on the fact that, hey, this volatility which was introduced will probably subside a little bit. So the options will lose some values, which is great because you want to buy them back cheaper. And there might be a bit of a correction coming up. So all these things might be in your favor for this particular strategy. Maybe something we can do on Tuesday now lunch and learn in more detail. But I would have to look at options pricing first for that.
Cool. And Google.
Google, all right. Short bounce, hitting resistance. Okay. Yeah, all the tech stocks are up, huh? Yeah, would I get it at this level? Probably not. Hitting that resistance back here. Just like Nvidia hitting right at resistance here. I would wait for a pullback or a breaking of the resistance. So Google, Amazon too. Yeah, I had Amazon before. Just real quick. Where do we have it? Amazon here. All these ones are testing resistance in some sense here. Nvidia too. So here I would wait for this level either to be broken to the upside or testing resistance here or for a pullback. What about Meta? Just real quick, out of my own interest. Probably jumped up too, I would imagine. Not so much. I don't know. Different case here. Okay. Anyways, what else do we have?
Dans, can you take a look at Apple?
Yeah. Apple. Oh, look at this beautiful entry point here, which we had at some point. Yeah, also near resistance. A bit too late right now up here. I rather wait for a bit of a pullback. Maybe that will be pull back down to this green line here at around 260 and then look for a long entry. I don't see a swing trading setup here, but of course, Apple, Amazon, Nvidia, Microsoft, all these stocks, these are great buy and hold stocks. And there's nothing wrong with even, buying more Apple shares, anticipating it in the long run over the years. It's a great buy and hold investment. I really believe so. But from a swing trading point of view, entering right here below resistance, probably not the best idea. So it's always depending on what you want to do. Yeah. All right. Cool. I think that's pretty much it, isn't it? Are you able to add earnings date to the chart? Yeah, Olga, there is actually in the Liquidity view, we have an indicator. I think there's a small bug with it. It's called corporate actions. You can see it here. Trading indicators, corporate actions. Once you put it on, you will see, I think there's a small bug. You will see these earnings dates that are coming up. So Apple on April 30th. Yep. You can probably also see it here. Yeah, you can see it also here on the scanner. April 30th, Apple has earnings coming up. Great. All right, guys. I think that's pretty much it, isn't it? We're 1 hour, 24 minutes in. If there are no more questions, just one more thing. Guys, try out our great dashboard at tradingindicators.com/view. At least give it a try for the first week. You will only be charged afterwards, and there's no contract, of course. And if you like to stay on, we have interesting yearly and monthly options. And if there were any questions that I didn't answer, we overlooked, send me a note at tradingindicators.com, go to support, then contact, put your question into the contact form, and it will go straight to my inbox, and we'll make sure to answer all questions personally. All right, guys. With that, I wish you all a great Saturday afternoon. Take some time off, recharge, and then we'll see you all next Saturday when there will be another power scanning session. Until then, guys, have a great day. Thanks, Niklas. Thanks, Soma. Talk to you soon. Bye-bye.